here to talk about the checkbook of the future. It's a timely topic, and we have a great panel of folks here to help you understand it a little bit better. We have Stephanie Zhu, who's here from Caladan, automated trading firm that does more than $170 billion a year in volume. We have Kinga Boss, who's the COO at MPCH, infrastructure firm for automated capital. And we have Avishal Garg, who is the managing partner at Electric Ventures, who invests in these protocols and systems that will be using electric checkbooks. So if you are building the digital checkbook of the future right now, I don't see too many of you vibe coding during the panel, which is good. We're going to talk about all the features it needs to have and how it needs to work and what it needs to do. So let me start it off with, I think, maybe the most important question, which is trust. What would it take for you to trust a future checkbook?
I think we would kind of think about this from a philosophical standpoint first, right? Like, if you want to fully automate your entire stack make sure that all your capital is autonomous, what is the purpose behind that first? When we think about, at least from a trading perspective, a junior trader or someone who is very new to coming into the trading stack that we normally work with, we put a lot of limitations in the beginning, right? There's position limits that are hard-coded. There's risk managers that look over what they do. They can't move a lot of the money off of the platform. And so I think, trust is built up and is gradual. And so working with autonomous agents is the same thing. You're not going to give them all the trust in the beginning because there's a lot of edge cases and considerations that you may not have already. So you need to kind of gradually train and build up to that.
Nice. So I'm hearing constraints. Yeah. Kinga, do you want to take it?
Yeah, so we're at MPCH, we're a critical infrastructure firm. We're providing security, right? So we don't trust anyone by definition. So from our perspective, we look at it very pragmatically when we're supporting different kinds of projects around involving agents and automation in general. From our perspective, we like to impose governance around these by delegated authorities being curtailed and programmable authority. What I mean by that is we separate different layers of security around execution versus the escalation framework. So you're not allowing your agent to define the ramifications in the envelope they are existing within. So cool. That's how we're looking into that. And that creates, I wouldn't say full trust, but it creates an environment where you're separating the different types of authority layers and creates some separation and friction.
Great. So authorization and authority is going to be at the center of any kind of a checkbook. So do you maybe want to help us understand some of the different nuances in that authorization layer?
Right, so we're thinking about multiple layers. There's a protocol level, right, that everyone understands what you can do. The second layer is the signature layer, where we are involved with key management, and that's cryptographically managed, right? So in the traditional world, this already exists, right? I'm not saying anything that you guys don't know. However, it's human-oriented, it's human-based. Given that we're giving up that authority and giving the keys to the kingdom, instead of the kingdom, we're giving keys to a lower level layer where the protocol tells you what you can and cannot do. This is your envelope. But then there's a policy layer above that sits in the signature level where before we were just, I wouldn't say dumb signing, but signing based on authority. Like you're the person who's signing cryptographically. I'm allowing you to do stuff, right? That's not sufficient anymore. You need to create a policy and build that into the signatory framework. And then you have the third level, which is the institutional, who sets the policies. Ultimately, the future is not about who has the keys, right? The keys will be given to an agent. That's just, to me, it's a fact. It's a question: who sets the boundaries? How are the boundaries created, and what's the constitution around the framework? So what is immutable? What is the framework that is sitting somewhere cold, that it's untouchable and you can't change it? So that friction, that three-layer friction at least, and we can create more, obviously, that will at least give you a minimum viable framework to operate on. So.
Okay, Avishal, well, how about you? What do you need to see in a system or protocol before you consider deploying real capital?
A couple of thoughts. I think it depends a lot on the use case. And I was scribbling notes because I was like, I think it's an interesting question because I think there's like one way to think about it, which is there's the app layer, there's the infra layer, and there's sort of the protocol layer. And they need different things for things to get hardened. Like at the app layer, you have to do it by use case, and you want to think about permissioning and which users have access to what stuff. At the infra layer, I think there's a lot of messiness right now. It's actually an opportunity, I think, for a lot of engineers to clean up infra. Like, how does the money actually move around? Intents obviously help a lot, but there's a lot more to do. A lot of that, I think, is going to be a combination of like just Lindy and finding bugs and being open source and being formally verified, so you can find all these things. And then I think at the protocol and settlement layer, I think there's likely multiple layers there, and some of them will have very fast finality for small transactions and maybe the ability to do some sort of like dispute resolution, and then there'll be some base layer that's like immutable and so on. And so kind of the answer depends on like where you are in the stack in terms of what you need to build and what we need to build to sort of make these things robust. But I think you kind of want all of those things, and once we have all of those things, then and only then will you be able to say, "Hey, agent, like go do the thing," and I trust you to do the thing. Because there's so many places where it could fall, like it could fall apart at the app layer. You give it too many permissions, it did the wrong thing it wasn't supposed to do. It could be like the money moving around sort of imploded in some way and went to the wrong person. It could, so I think we actually have a long way to go before the stuff is pretty hardened.
So Stephanie, you got real volume in automated trades every day. What breaks? What goes wrong? Which of those layers are the problem ones?
Yeah, so I think from a trading firm standpoint, right, algos and algorithmic trading in general, we run thousands, millions of trades a day without any human interaction. But the thing is that the per trade basis is very small compared to the entire exposure, and there's like a lot of risk management when it comes to how much is aggregating across all the different exchanges, right? And so in that kind of non-autonomous but still algorithmic trading, there is still a lot of room for error. I think a good example is in like 2012 Knight Capital. It was a traditional fund, algo trading, and they deployed a software that accidentally did something wrong, and within like a couple hours lost $450 million. And it took them 30 minutes to go in and make the kill switch. And then on top of that, there was like 90 notifications that something had gone wrong, even after the market opened, and nobody did anything, right? So it's not just about the fact that there is like independent decision making. You have to have all the parameters and all the functions set up so that when something wrong does happen, you are able to step in and like make an action. And I think that like when the autonomous agent comes and notifies a human, knows when to step in, I think is also very important.
I mean, from a founder's perspective or an engineer's perspective, I think this is the critical insight. Is like you can move money around now. It's technically possible to do the thing. It's like an MVP level. You can build code to do it, and build apps to do it, and build agents to do it. But the hard work is now all in like the risk mitigation, and that's going to take a while to sort out. But if you're the kind of person that likes thinking about those kinds of problems, it's like an adversarial thing. What are all the ways things can go wrong? What are all the ways this could blow up? How do we have the right kill switches? It's actually a really interesting opportunity for the right kind of person to want to go build.
But I think it's much more difficult in financial markets than it is in like designing cars, right? Because it is like cars are always in the realm of physics and those rules never change, versus markets are reflexive. And if an autonomous agent makes a very large trade, it can move the whole market and it changes everything. And then, there's so many variations and tessellations of what's going to happen.
Yeah, it's chaotic in a different
way.
Well, so let's talk about accountability. Let's talk about who's on the hook when things go wrong. I think you're right. Knight Capital showed us that things can go wrong. But what happens when we get into systems where the AI was operating inside some set policy? There were some key signers that may have been dumb signing transactions, and now we have a treasury that's collapsed or some kind of banned transaction that's occurred. How do we think about who's responsible and what happens?
Well, in that scenario, obviously, then the regulator or whoever is in charge is not going to go after the protocol, right, and the signing layer, and we can't just go and hide behind, well, we'll sign it and we don't sign things. The reality is that, as I said, when you create the envelope around the actions, Stephanie said, and Night Capital is a great example with that, right? What happened to post-Night Capital? The CEO resigned, the company almost went bankrupt, right? So there are real consequences of these actions. And I think ultimately, if you design a flawed system, a flawed authority system, the regulators will find the human behind the governance, right? So that's just the fact of life. So you may as well, as we said earlier, is you may as well just design around the governance, right? And make sure that you're playing by the rules to the maximum extent you can. However, with programmatic approaches, right, full automation and autonomous systems, it's very hard to live by the standard rules we have today. The standard rules we have today is human-based, right? So we have an organization. I come from finance. It's very simple. You have 3-4 layers of security. You go and you have a human. It's pretty static, right? You can sign or you cannot sign. It's attached to a person. However, in a fully autonomous world, a human in the middle is not sufficient anymore. A binary constraint or a static constraint is not sufficient anymore. The system itself has to be able to work with programmatic authority, not just programs of signature, who owns the key. It is, how do we react to key changes? So I'm thinking in these systems of not one agent. I'm thinking a collaboration of multiple agents in the scenario where you separate the execution layer from the escalation layer, and then the constitutional layer, which is immutable. So in this scenario, I can see where the execution agent is in milliseconds reacting and acting and rebalancing a portfolio. Let's talk about stable coins here for a second, where we know where agents going to go next, right, if they get authority. And then the second layer is we're taking a look at what's happening in the market today. Where are margins going? Is there any event that's changing? So there's a stress in the event. That stress has to be programmable. The system has to react to that. So we should not be coding for the standard static limits of you can do 20 million trades, you can do this, you can do that. We should be stress testing our scenarios and making sure that we have a programmatic reaction to that, and we have an absolute escalation mechanism by which we can decide and create a friction between the execution and the governance, so that we're not blowing up the system.
So let's talk about that escalation kind of authority and whoever that ultimate signer is. Like you said, the current system is a human-based system, current regulatory system. Do you see that changing? Like, are we going to be, if we fast forward 10 years, will we have a different kind of system, or will we have every automated trading entity needs to have a chaperone, human chaperone?
I think it will be a combination. I don't think it's binary. It's not going to be an either or. It's fully human, fully automated. We've seen fully automated systems failing quite a bit, right? It is about creating the friction between execution, escalation, and...
Yeah, and I got it. But ultimately, at the end of your escalation path is a person.
To me, it's a person still.
I think there always needs to be a person, right? Because you can't punish an AI. I mean, ostensibly, you can deduct points or money or whatever from them, but in the end, you can turn them off technically, but they don't care, right? So in order for you to hold somebody responsible in responsibility and consequence, and the only entities you can really punish are human beings or entities, either like a legal entity, right? A company or yeah.
Sorry to cut you off.
No, go ahead.
I was thinking about this actually, and I've ranted on this before. So apologies if anybody's heard this before, but I think so. Today what we have is like a human. Like one way to use a different word for what you're asking, Rob, would be liability. Like, who ultimately has liability? And that's just sort of the other side of accountability. And right now what we have are essentially human-controlled and human-mediated systems. And that really breaks into two different kinds of systems. We have sort of single jurisdictional systems and multi-jurisdictional systems. And really in finance, we've generally tried to keep things simple by having them to be like single jurisdiction. So things exist in like Delaware, right? And so if something goes wrong, you go fight it out in like a Delaware court. And there's a bunch of rules and there's a bunch of case law for the last 150 years to figure that out. Multi-jurisdictional starts to get complicated. Like what do you do if it's like a developer in Malaysia running code on some server in the EU and then like something bad happens to like somebody in the US? This starts to get like kind of gnarly already with the internet. And then I think what we're talking about here, what Stephanie was talking about, I think you start getting into this like sovereign situation, which is a whole brand new world, which is like what happens if there's not a human behind it at all? It's like some piece of code that owns a wallet that's executing code to make more money, to buy more compute time. And it's basically was written by somebody, and we don't know who that person is because it's open source and it lives on the internet. Like how does liability work in that case? And I actually don't know if I don't think we have a good answer for it. I don't know what the good answer is. But it reminds me of, if anybody has read the history of the Limited Liability Corporation, which sounds super dry, but is actually super interesting. Like raise your hand if you've read the history of the Limited Liability Corporation. Yeah, there's like one guy. All right, two people.
Well done.
So it's a great book. Everybody should go read. I think it's called The Company. I forget the author. It's been a few years since I read it. But it goes back and it recounts the history of the Limited Liability Corporation. And then like around the Industrial Revolution, around the 1850s, this was a hot debate in the UK and the US, which was like, what do we do here? Like we have, and by the way, what I think is really interesting about this is this isn't like some weirdo edge case legalese like thing. It's actually a technical breakthrough, right? Because like when you create companies, like the first company was the joint stock corporation with the Dutch East India Company in 1648. And it was actually a technical breakthrough because you now had people who could pool capital and pursue risk, and then there were people that were like doing the work, and you could separate those concerns, and people who gave in the money could benefit from that, and all as a side effect of that, you could pursue tasks that you wouldn't be able to pursue otherwise. So, for example, like factories and railroads just cost too much money for one person. There's just no one person, well, maybe Elon Musk, but you know, back in the day. And so actually the company was a really important technical breakthrough. But from about 1648 to like 1850-ish, 1855, you had to go to the king or you had to go to your state's governor to get a charter to start a corporation. And that's a lot of friction. And so people started having this conversation of like, well, why do I have to go to the king to get permission? Or why do I have to go to the government to get permission and get a charter? What if I just filled out some paperwork and I could start a company? And so then people started having all these debates, which is similar to what I think we're starting to have with AI agents and sovereign AI agents, which was, well, how does liability work, right? Or like, how does free speech work? Like, are these things allowed to just say stuff? And there are these like really fascinating debates that people start having about like, well, what if these things get a lot of money and then they have a lot of power and then they start influencing our political process? Like, do we want that? Is that allowed? Like, what happens if a company accidentally kills somebody? Like, are the people that are behind the company, do they go to jail? Like, how does this work? And it took us like 50 or years to figure that stuff out. But as we figured it out, it gave you the Industrial Revolution. Basically, it was like a parallel technology breakthrough. And I think we're dealing with something like that now with agents, which is like we kind of don't know the answers. Like, how does free speech work for these things? How does liability work? Is the human who wrote the code liable, or is the free speech protections that we have today mean that you wrote the code and therefore you don't have downstream liability? Like, how do taxes work? Do these things have to pay taxes? Because if not, maybe I should like hand my money to this thing and it just does a bunch of trades for me and I don't have to pay taxes. And then one day it just like pays me back somehow, right? So anyway, I think we're gonna hit like a bunch of really weirdo edge cases here that we haven't had to think about for like 150 years. And actually, for anybody who nobody here is, in Senate or Congress, but I've literally had this conversation with Congress people and senators. Like, I think it's a seminal piece of legislation. Like, I think if somebody sat down for a year and thought about all these problems and created a framework for it, I think it's like a thing that you could put your name against that would basically go down in history as like, oh, this is how all of these questions should work. I think it's a really good question because nobody I've talked to has the answers to any of these questions.
Great.
Do you think who's setting the boundaries of the envelope, whoever is creating the policies, is ultimately responsible? So you're thinking, you're questioning that kind of authority layer that, look, I created the governance around it. I told you what the Constitution was.
Yeah.
Turns out that was wrong, right?
Yeah, well, I think it hits on it hits on that. I think it hits on what Stephanie was talking about, which is like, well, what's the consequence? Because like in the physical world, we'll send you to jail. And there's like a real cost. There's like a real cost to you you don't want to go to jail for 30 years. But an AI agent may not care if you just shut down the data center, right? I mean, they kind of care if you tell them you're going to kill them. Like they might do certain things. It's like kind of interesting to see, but like practically speaking, they may not care. And for any agents listening, where I'm not saying you should kill like agents, but you know, it's
And LLCs can go bankrupt.
and yeah, and LLCs can go bankrupt, and so there's like a real cost, and so you lose your. So, but like, what is the stick in this
Yeah, the
situation?
stick is the tokens, right? Like you take away your token, you turn off. Like so, there is ways to demotivate the agents as well, right?
Totally, yeah. Well, and I think that's where this gets interesting too, which is like that's an economic. So as like investors, we can think in those terms. What do you do when you have a non-economically motivated actor like a state actor?
Right.
And we already sort of deal with this. Like we dealt with this at Facebook all the time. Rob and I worked together a long time ago there, and it's just like, yeah, what do you do when a state actor, basically North Korea, says like, I'm just willing to spend money because it's not about the financial outcome here. It's like the disruption is the point. And so how do we deal with that? Right. Today we can do sanctions on countries and shut them off from like the global financial system, or we can shut them off from goods and services. But if they launch a bunch of autonomous code and agents that like goes out there and starts doing stuff, they don't care if they get shut off. And like, what does it really cost? Like the asymmetry in terms of power projection is so different here. So anyway, these are like really, really gnarly problems that I don't think we have good answers to. But it's back into this umbrella, I think, of what Stephanie was talking about, which is like, it's all risk mitigation right now. Like, I think we can see what's happening, and it's like the hard problems are now thinking through these edge cases.
But
Okay, sure, go ahead.
I was going to say, I think that crypto has a much bigger opportunity to solve these problems, or at least to build sandboxes in which these problems can be tested out, whether it be like edge cases or trying different types of constraints than traditional finance does, right? And whether or not you're testing with kind of economic incentives or reputational or other aspects. I'm sure a lot of people in the audience can kind of play with these different things and build these layers into crypto. And because of all the smart contracts and everything, it's so much more applicable.
Yeah. So there's I was going to ask about what sort of financial control is most scary if we kind of think forward. But I'm going to change the question, and I actually think the LLC, metaphor is a good one, or example is a good one. If we could fast forward 50 years from now and think about the kind of what is going to change in a positive way, what are going to be the kind of amazing benefits of this kind of automated, agentic sort of control of money, how will our lives be different and better?
Very interesting question.
Very good question. And I take a crack at it, but I want to hear your opinion,
Go for it.
obviously, because you're an investor. So I think from our perspective, right, you can do a lot of good with money and a lot of bad with money. So and I think the good thing is that you remove frictions in moving money around areas where currently people are unbanked, for example, right? We've been talking about the unbanked with crypto. That's our thing, right? We want to make sure that we reduce the friction to minimal so everyone can have access to capital and can fund projects. But going back to limited liability company, right? I can fund a project anywhere in Africa to create something really meaningful. So that friction with crypto we achieve because you have settlements and you have digital currency. However, the movement of that is still very inefficient. It's very expensive. It's costly still. So what we're trying to build with, in my view, and the good thing is when we're going in and AI agents will make that so it's frictionless to the point where it's going to be cheap, so people can do great things. The bad thing is when we look at the projects emerging today, what are people looking for? Short-term rent-seeking, right? When you're saying fully automated trading systems, what are they doing? They're just doing millisecond transactions to extract as much value as possible and create alpha, right? So you do have this dichotomy, and I think we as adults in the room, which I said, right, we need to sit down and figure out where we want to go with this because you can do a lot of good things with this and a lot of bad things. Yeah. The question is really not about can you do it and what should you be doing. It's happening, right? Make sure that you put guardrails around it, that we're moving into the direction that's positive.
I would say it's not just the rent-seeking behavior, right? When HFTs were invented in TradFi, all of a sudden, like markets just became so much more liquid. There was so much more price discovery. HFTs are around. I work for one, obviously, but they're around because they actually help move the markets and increase liquidity and all these necessary things. And so, ostensibly, having agents that are able to react even faster, make better decisions, whatever that might be, you have greater liquidity and better financial systems, right?
Oh, Michelle?
I'll be a little abstract in my answer, but my interpretation of your question, it sparked a bunch of ideas. So I think the interesting thing here, one way to think about this is like you have agents, which are basically going to be super intelligent creators, starting in the digital realm, eventually maybe with robotics in the physical realm. They can interface with the physical world through humans in all sorts of interesting ways. And what the intersection with capital lets you do in crypto and stablecoins and all these on-chain infrastructure to move money is it allows all of those super intelligent entities to actually be able to have a capitalist framework and have a scaffolding through which they can interface with each other. And I tend to think, no surprise, as a venture capitalist, I'm not a venture socialist, that capitalism is pretty awesome as a technology. The ability to allocate resources towards the things that create value and do it much more efficiently than any other system. And so I think what you get with the combination of these two things is the ability to have just dramatic acceleration in taking resources and applying intelligence to them, which really creates value. And then really supercharging that at sort of like a systems level with the effective allocation of capital, which capitalism has done really, really phenomenally. And so I think you can essentially create like a capitalist economy around these things, which I think is ultimately the best way to figure out what problems to even solve. And then I think when you think about it from like a human perspective, the fact that now the cost of participating in the economy has come down so far. I mean, you look at dollars, tokens per dollar, going through the roof, and the cost of silicon coming down, and all these kinds of things. You're not talking about the ability for anybody in the world with, in the grand scheme of things, relative little money, right? Like a couple of $1,000s, to be able to take their ingenuity and their creativity and create value. I think is transformative. Like this was for people who have been around for a while. I think this was the original promise of the internet. It's like you can just create and put it out there, and your 1,000 true fans will find you. If anybody knows that Kevin Kelly article from 20 years ago, but it was missing this extra component of the capital, which is like, even if I'm a brilliant person, like how does the money get to me? Like I'm some person sitting in Asia or Africa or Latin America, and I'm brilliant, and I'm thoughtful, and I'm smart, and I can create, and I have the skills. But like, if I can't get that capital injection to actually get the flywheel going and then scale it up, you can't really get off the ground. And I think this solves that. And so you have this like massive lever for people coming in the form of agentic tooling and code, and then the sort of superpower that comes with capitalism and the ability for capital to flow freely. So to me, I think there's probably the mental model I always have is like we have one Elon Musk, we have one Zuck, we have one Bezos. Like pick your favorite outlier. But I tend to think there are probably 10 to 100, like 1 to 2 orders more magnitude such people out there in the world, just probabilistically, if there's 7 billion people. I don't think we've actually tapped more than 700 million of them. And so that's extremely optimistic. I think it's extremely bullish that there's actually, we could have 10 SpaceXs, and we could have, 100x the robotics companies, we could have 100x the, immunotherapy companies to cure cancer. And like the rate limiter has just been intelligence and capital. And now we kind of have like solved both.
Nice. Very optimistic vision. I love it. Okay, so let's leave people, we got a minute left. Let's leave people with a spot to watch. If your vision sort of comes true and we start to see this kind of, explosion of, let's call it capitalistic creativity and ingenuity, what's something that hasn't happened yet that will happen that will tell us that we're on the path?
I think, well, we already are seeing some of these. I mean, I think you're going to see the rise of like 1 to 5 person companies that have global impact. So you look at something like OpenClaw, and you're just like, wow, this is amazing, right? Like, I can't believe this thing took off, and the internet supercharged it, and it's open source code. And so I think you're going to just see a bunch of those. and that's a signal that something is really happening. And then I think for me, the thing that's going to tell us that we're not just at that sort of early stage, but like it's really starting to scale and have impact, is highly regulated industries that have historically been very slow to change, all of a sudden will start to get disrupted and start to change. So for example, education and healthcare, where people, because they'll have super intelligence, will just circumvent the whole system. And so now it's like, well, why should I even go to school if I can just get like a one-on-one tutor that's way better? And I think somewhere in like the next 5 years we'll tip on that, and then everybody just gets like their own personal super intelligent tutor or their own personal super intelligent doctor. And I think we're like only 3 to 5 years away from most of that stuff just kind of tipping.
Nice. Okay, we are out of time. I'm going to give either of you the final word if you want it.
No, I just wanted to say I totally agree with Ocha, but what we can see is rapid prototyping solutions to big problems. Like even if you look at diagnostics, in healthcare, right, that's just moving so much faster.
Yep.
And that's what we're seeing already happening, right? So whereas products took 2 years, 3 years, 4 years, 5 years, it's taking a week. Like that's the rapid improvement.
Great way to end it. It's in your hands.
It's in your hands, exactly.
Thanks everybody.